Alright, so let's take a look at what's going on in the YM. In the YM, you had this pullback. It was really a strong pullback here. There's a retest of ice. It's not really ice. Ice is before that, but retest of the high bar and a pullback. After that, one of the key things is to look at volume. And you saw that after the pullback, there's a massive volume over here. This volume, it was difficult to determine whether the new trend would continue, but later on overnight you saw that there was a lack of volume here, lack of volume here. So the lack of volume and selling pressure is what gave rise to this bar. This in some sort of way is kind of like a minor markup bar, and that's leading prices going higher. I have targets. Yeah, I'm really not sure if they're going to clear this resistance area, but it looks like they have. And targets can be anywhere up here. So that's a DYM. Next is the C-Rude. Crude, again, the key thing to remember is that they had heavy volume. So then what happened is buyers came in, and now you're just hanging at resistance. I don't really see anything here other than, I mean, a lot of technicians, what they would do is they would draw something like this and think this is some type of springboard or apex like formation or wedge, whatever the hell it talk about. But for me, it hit resistance, pulled back, it's hitting the moving averages, and we have good volume in the background. Okay. I'm not sure why this market's so sluggish. Usually it's sluggish when it's setting up a base. I'm not messing with it. Let's take a look at the 6E went to the target. There's different ways of doing target calculations. I've come up with my own way, which I think makes a lot of sense. You know, a lot of folks will use Fibonacci, or in Wyckoff they use cause and effect, right? There is one other way. You see, markup, when markets go from accumulation to markup, typically there's a markup bar, and that markup bar has range. It's pretty big, and that markup bar, many times you'll see that the distance traveled in the markup phase is a multiple of the size of the markup bar. For example, For example, over here, this was the markup bar, and the multiples up here is where I believe that price is gonna have. This is where the targets are. So you could take based on a markup bar how much markup there's gonna be. This is a quick and easy way of doing it without getting having to use multiple charts and point and figure and all that. So in the euro, we've hitched the target, and there really is no evidence for selling, which means you can't really sell that market. Next is gold. Gold is really interesting to me. The only reason it's interesting is you can see is the high volumes coming in. So what does that mean? Well, people bought it over here, and it accumulated 38 volume. 38, I think this is in hundreds or thousands or whatever. Over here you have a pullback, and it rivals the 38. So from a tape reading perspective, the selling pressure rivals the 38. Now, does that mean that you just say it's bearish? High volume by itself doesn't mean jack. It'll be bearish when this low is broken, because that means that it really was distribution. So the key is right here, 1241.3. I want to see this area broken and also how it breaks. I want to see a thrust. I think this is initial distribution though. The reason is, you see the buying is not really that strong. Like over here, they bought 21, it immediately dumped, took out the low. It shouldn't have done that. Alright, the fact that they had this volume up here and immediately 19 dropped and took out the low like that, not good. So watch for gold to basically break. Alright, so I'm going to watch for this market to break. Next is what's going on in the treasuries. Treasuries gone crazy. You had a base right here. The high volume, it basically tipped you off. High volume, and eventually absorbed here and broke out. Now, if this is the markup bar, then forget about it. I'm not really sure. I think this was the markup bar right here, the range. Well, all I could say is, it's bullish, at least on this chart, and you can't really do anything. No turning points, nothing. And finally, the next and last market is the yen. The yen is showing some type of weakness. Like what they did here was very interesting. They sold almost 50 volume and broke it up into two waves. Here, see that? Sell, and then try to show strength, which is a false move to capture, and people were interested. This is a false move. The volume was telling you what's really going on. Then you just had that test of the breakdown. That was the place to get a short. This is a thrust, and I'm not really sure if this is in markdown yet. It looks like it's just pulling back from a very strong background. Has the volume come in? Well, you have 24 and 24. So let's take a look at its history and see how much. Oh boy. Initially it took off on 44 volume. Okay. I really don't think it's done. I think you might have a chance of bouncing right over here. And we'll just take a look at it. So bottom line, the yen in pullback mode. And though I do like this bar over here. Yen in pullback mode. This right here is also in pullback mode from a very strong base. This is the treasury notes. Gold, I think gold has a shot at undergoing distribution and breaking. So I think that right now my eye really should be focused on gold, because I'm looking for sideways movement and a thrusting break. You're gonna notice that, you see these two, that the range over here is telling you there's selling pressure. Even though it went down and went up, down and went up, they're holding. So I think that this thing is gonna break, and if it breaks, I'm gonna get in. And I like the way there was a buying climax here, and whoever did this, look, they dumped all of it. 27 straight up, 34 straight down, selling pressure here and here. Now lack of demand on the right hand side. It's looking really nice for a short. Um, and I just got my eye on this. I want to see one more test. You know, what would confirm it is if it breaks this low. If it breaks that low, the game's over.